Welcome back, everyone, to Living Your Greatness. My name is Ben Mummy, and today I'm super pumped to welcome back Andy Schectman. Andy, last time we were chatting, it was June in 2024. Gold was at 2,300 and silver was at 30. And if we look, falling at the time, central banks are starting to buy. You were educating, right? And if people were listening, now if we look today, gold is at 5,200. Silver is at 87. Yes, we saw it go higher. But more importantly, Andy, welcome back to the show and excited to celebrate. You called it right then.
Well, it's good to be here, Ben. I appreciate it, bro. Blind squirrel finds a nut every once in a while, I guess you could say. Look, the bottom line is this, is that if I have any, if I excel in anything in this industry, it is being able, first of all, it is, none of this comes without tremendous amount of effort. I've spent 3 to 4 hours a day, 7 days a week, at least 6, if not 7, reading and scouring information from across the globe. Never once maybe I'll read a little bit of the Bloomberg recap, but that's it. And then I go deep away from the mainstream into news sources all around the globe, all very, very credible, but that paint a more realistic story of what's happening around the world. And if I've had any success, it has come at the ability to be able to connect dots. And in my connecting the dots, which when you connect the dots, there is never any guarantee that the dots you connected are the right dots, but either I'm stupid enough or courageous enough or somewhere in the middle to publicly say what I believe is happening. I appreciate I probably should turn off my ringer. Of course, my ringer is Stairway to Heaven guitar solo, so we don't want that to be on, right? But I appreciate that, and I see things happening based upon moves that I've been following very closely for a long time, and most of what we see, most of what people think is the reason behind the drawdown in silver, the price that fell, or most of the reasonings that people look at as to why gold and silver have gone higher before the pull down. Both of them, either up or down, I think are wrong. And I think there are certain things that you can just make this real simple and real easy and go from there. So I'm happy, Ben, to take this any way you want. I appreciate the kind introduction. I appreciate the compliments. It means a lot to me. And but all of that, is great, but has to be supported by logic and factual. And that's where I like to live, in the area of facts, logic, and connecting the dot. That step, all of this to here is all, right here, this is all reality and logic, mathematics. But to get from here to here, you have to take a leap, and a leap of faith that you're reading this the right way, that you're interpreting it the right way, that the information you're getting is legit. And that's the tough part when you're saying it ultimately to millions of people. And it's here for eternity to be validated one way or the other. So, let's keep rocking and rolling, and I'm happy to dig into it any way you'd like and tell you the way that I see the world. Let's hope that it provides a little bit of utility and value to people.
Right. Well, I want to stay on connecting the dots. If you could just go one step further, what do you mean by that for gold? How are we connecting the dots when we look at the whole financial world right now? And what about silver as well? If you could connect the dots, both of those, and take your time.
Well, be careful what you wish for, brother, because I have a bad habit. I mean, you may say 6 words this entire podcast, but if that's what you want to do, I'm more than happy to try and connect the dots for you. I guess if I were a professor in a college setting, in a auditorium or a classroom, the premise that I would lay out on the chalkboard, at least let's talk. I mean, we can mix gold and silver together. I mean, there are a few premises. Number one, gold and silver are being reintegrated into the monetary system. Primarily gold is being reintegrated into the monetary system, but silver is being finally, I believe, identified for what it truly is. Um, and I'll explain what I mean. Let's start with, how can I do this the right way? You know what? I'm going to do it one at a time just to make it easy. Let's start with silver. Because the gold idea is something that I think it's going to take me 10 minutes to explain it, but when it's all said and done, I think the dots line up well. And I've said this in front of very, very, very smart people publicly. And by and large, I've got nothing but good feedback. So we'll start with silver. But in order to tell the silver story correctly, Ben, we have to go back and talk about gold for a minute to lay the foundation on the way that people at these levels work. So, and this will help the story with gold too. So before I started doing podcasts, I did a lot of public speaking on stage at conferences. And I really started talking about the central banks being involved in buying gold in 2017. Now, what's unusual about that time frame, Ben, is that in 2011, we had gold and silver reach, at that point, their all-time highs. Silver was at $50 for a brief moment, and gold was $1,915. By the way, for those of you who keep in the back of your mind the silver to gold ratio, 37 into 1915 is, 50 into 1915 is about 37. So, that 37 to 1 ratio is not far off its 200-year price average of about 43 or 4 to 1, even though it's still coming out of the ground at 7 to 1 right now, but that's another story. Anyways, so in 2017, after 6 years of the market falling from 2011 peak down to 2017, it was a very tough time to run a business in precious metals. The Dow Jones was climbing and climbing and climbing, and Bitcoin was launching. And this is, Bitcoin was starting to finally become something more than just this fringe idea that you could buy a pizza with for, 80 Bitcoin or 500 Bitcoin, because they were 40 cents a piece or whatever, and the guys that ended up spending hundreds of millions of dollars for a box of pizza kind of thing. This was now starting to become a reality. Price was moving up, and it was starting, into the hundreds of dollars, and people were not looking at gold and silver. 6 years of the price falling, central banks selling, Dow Jones taking off. It was a bad time to run a precious metals business. So 2017, in all of this environment, we see something very interesting that starts to change the narrative. Quietly, a few years before, the German Bundesbank was saying, give us back our gold, please. Give us back our gold, please. Give us back our gold, please. In 2017, they said, give us back our fucking gold, more or less is what they said. And they put out, articles in the Wall Street Journal and whatnot, and telling the New York Fed to give us back the gold. The New York Federal Reserve has held some of almost every nation's gold for a very long time, over 50 years, because it would give direct access to the COMEX market. But not only would it be safely stored in a Western, rule of law, et cetera, the U.S., it was a safe place to keep it, and it would give direct access for immediate trading within the COMEX ecosystem. Germany said, we want our gold back, and made a very big deal about it. Caught my attention. Why are they doing this? They've been selling gold, all the central banks. Then things got really interesting. Within a few weeks of that happening, the Bank of Austria, Hungary, Poland, Turkey, the Dutch National Bank, the Czech National Bank, all of these banks said, we too want our gold back, and not only from you, United States, but also from England. The Bank of England, LBMA, would give access to the LBMA, safely stored in England, safely stored in New York for the COMEX, and these countries would have direct access with the two delivery and price setting exchanges on the planet. Great. So, but very strange that this was happening all of a sudden out of nowhere. The next year, those same banks, bought more gold as a group than they did in the 60 years previously combined. And now something's, whoa, what the hell? 2019, now remember, they've been selling forever. And now all of a sudden they're not only repatriating the gold, give it back, but going on a massive buying spree in concert with one another. In 2019, those numbers doubled. And now they're buying more gold than ever. What the hell is going on? And then ironically, somehow magically, of course, there's no coincidence. The Bank of International Settlements, the central bank said, by the way, gold is now a tier 1 asset. So in my mind, the central bank, the BIS said to the central banks, listen, y'all, you might want to bring your gold home. You might want to start buying it, which they haven't stopped buying since then, by the way. The central banks are continuing to buy in a voracious manner. And I started talking about this publicly, screaming about it. In fact, in 2020, I started talking about this new group of reportables on the COMEX Commitment of Traders form called the COT, the Commitment of Traders. It shows the positioning of the two biggest traders on the exchange. It would be the specs, the hedge funds, and the commercial banks. One would go long, one would go short. Then all of a sudden there's this third group of reportables that they've never talked about before that came out of nowhere. They call it the others. These others are sovereign wealth funds that had started standing for delivery. We never saw that, right? And I'm doing podcasts on Liberty and Finance in 2020 saying, Dunnigan, this never happens. My whole career, been less than 1% of contracts on COMEX stood for delivery. Now all of a sudden you're seeing massive deliveries. You're seeing the central banks buying. You're seeing them repatriate their gold. But the point I want to talk about with that gold is that at that level, information is everything. So if you think that it's a coincidence that the banks out of nowhere start repatriating their gold from the primary sources and then go on a incredibly, exponentially large buying spree that has never stopped, and then they say, by the way, it's tier 1. Well, I got a bridge to sell you. These people, they take care of their own, right? The central banker said, get this shit done. We're going to reclassify it. You're going to want to bring it home. It's going to be reintegrated. So that, I've publicly said that in over 5,000 videos. So keep that in mind. Now let's talk about silver. There have been 8 Western banks, United States, Canada, European Union area, Great Britain. They have maintained the largest concentrated short position on COMEX of the 1,000 commodities traded for 30 years. I mean, it's JP Morgan paid a $920 million fine to the Justice Department for manipulating the metals market. The theory of suppression is real, and I'm not here to debate it. We could talk about it ad nauseum, but the central banks have suppressed both gold and silver. We'll talk about silver for a moment. Why did they suppress it? Now, if you're going to let me go on this, I'll give you the whole master level class right now. So they suppressed silver, they being the West, because silver is an integral part in high-tech weaponry. There's copious amounts of silver in everything from cruise missiles to these new, especially the new hypersonic missiles. The speed and the heat that is generated in the cone, nothing can withstand that heat better than silver. So in the guidance systems and in the cones of everything from F-35s and stealth bombers to Patriot and Tomahawk cruise missiles to submarines, it all uses copious amounts of silver. Who rules the world with strong military? Well, that's the West. That's not just the United States. That's England, that's France, that's Spain. All of these countries in the West have ruled the world by a very, very strong and imposing military and in coordination with one another. Who stands behind that but the military industrial complex, like BlackRock? It's interesting when you look at BlackRock, who is the military industrial complex. Basically, they are also the custodian, along with JP Morgan, of SLV and GLD. There's a whole lot of symmetry in all of this stuff. So the act of suppressing by these 8 banks in the West the price of silver was not about holding the price down as much as it was letting rising price would signal the significance and the importance and also the scarcity of silver. They don't want that. Why do I say it's not about the price? Because I have a client. Now, there are some people who will debate this, and I stand behind it, right? And you can look it up on ChatGPT. It will cite my name. I have been told by a client of mine who was a consultant at the DoD who helped design the Patriot missile, who told me there is between 13 and 14 kilograms in most of these high-tech Patriot Tomahawk cruise missiles. And some less, some more, and all of this stuff has massive amounts of silver. But if there's 500 ounces of silver in a cruise missile that costs $10 million, what the hell do they care what the price of silver is? They don't. It's called inelastic. It's like if there's 20 bucks of silver in this phone that's $1,500 or $50 worth of silver. Do they care? No. You need it to make it. It's called inelastic. It's a small part, a small cost component of a much bigger price, but it is integral. So the West have maintained this short position. How have they done it? They've done it in a way where, let's pretend you are Deutsche Bank and I am Bank of America. And our goal is, and maybe who's telling us to do this? Well, who runs the military-industrial complex? Are they running the world? Are they higher, more important than the government? Are they the government? I mean, there's all these conspiracies, but the military-industrial complex is real. It's very real. And let's just simply say, I believe they have been pulling the strings as far as the price of silver and gold, or well, silver in particular, for a very long time. And here's how they would do it. Bank of America would short massive, or any of the Western banks, JP, Goldman, Citi, but I'm Bank of America, you're Deutsche Bank. I short on COMEX, huge amounts, drop it onto the market. The price collapses because when you short, you're selling onto the market. But these guys are shorting huge amounts, right? Like millions and millions and millions of ounces. Oh, millions of ounces. Like more than a whole year's worth of global mine supply, they will short in a year to drive the paper price down. Now, when you short on COMEX, that is the only place that affects the price. So they have a balance sheet, right? Well, balance sheet implies the sheet has to be balanced. So you short on COMEX, you take a corresponding long position in London on paper. That long position in London is a delivery contract, but it does not affect the global price. It only affects the price over here. So you drive down the price, you take a long position in London, your book is balanced. And most of the contracts that were issued, my entire career, less than 1% ever stood for delivery, right? Very little in the way of delivery. The concept of the COMEX market originally, if I'm a farmer and you're a baker, I plant a field of wheat in May, you need wheat in September. You're happy paying this price in September. I'm happy selling it to you for that price in September. I offset my risk, you offset your risk. And so I know that at the end of it, no matter what the growing season looks like, I've already sold it to you in September. Now, it could be a great deal for you. Maybe it turns out to be the best growing season ever. Maybe it doesn't. You're taking a risk, I'm taking a slight risk, but removing the big risk. And that big risk is I need to sell my crop. I need to have wheat to make bread. We meet in the middle. If I have 5 million ounces of silver in my warehouse, I'll sell 500 million or 5 million on COMEX. So they move inverse of each other. One goes up, one goes down. I remain market neutral. I don't speculate with my inventory. If I am a producer of gold, I'm mining gold and I know that it's there. I can see it all. I have it's validated. But I need to guarantee the market is volatile. I want to guarantee the price that I'm happy with to sell it to you after it's refined. So we meet in the middle. You buy a September contract, I sell a September. So I'm hedging my production. You're hedging your purchases. So everything is done to offset risk. Keep that in mind. That's what it was originally designed for. Not so much anymore. So anyways, of these contracts, 1% or less would stand for delivery. So I have my long contract in London that offsets my short position that drove down the price. And by the way, when they would short the price, I would argue, and there's a lot of evidence to support this, when you sell something short, you get money back. That money, I would argue, a lot of it went into treasuries in order to suppress interest rates and to keep interest rates low. So they would knock down the price of gold, which is the canary, or silver in this case. Well, let's forget about the treasuries for a moment. Let's just play this game. I don't want to get too complicated. I sell on New York, drives down the price. I take a corresponding long position on paper in London, and less than 1% would stand for delivery. So sometimes someone would say, legitimately, I need delivery. So I would say to you in London, okay, ship me back some of that gold on my long position. I need to deliver. Someone is going to requesting delivery on my short position. Okay, fine. So most of the time, what would go back and forth would be what's called warrants. You own it, I own it, you own it, I own it. So the metal didn't have to come back, but a lot of times the metal would on what's called exchange for physical. You can take a contract and send it over in exchange for physical and vice versa. But the majority of the trading would go back and forth, tremendous volume between me and all of us, the 8 Western banks, Goldman, Citi, Deutsche Bank, UBS, Standard Chartered, TD Bank. They would all trade with each other to make it look, there's all this volume and velocity. But at the end of the day, it would be used to cap the price, and very little metal would go back and forth. Some would, some wouldn't. But they've been doing this in concert for 50 years in order to have a military-industrial complex that can produce and sell weapons all around the world and blow places up like Syria and the Ukraine, and then who gets the reconstruction contracts? But BlackRock, which is a military-industrial complex. So it's about the wealthiest institutions in the world being able to sell weapons inexpensively without the world knowing how important silver truly is, crowding them out of their ability to get silver, which would crowd them out of their ability to make high-tech weapons, which then are sold to the world, and then the cleanup process and other things that the military-industrial complex and BlackRock are part of. Well, all of that opportunity vanishes. So that's kind of the story, the underlying story, and why it's so important to understand that. These banks were together for a very long time. I believe they are not anymore.
Why?
Now I'll get to that. But I needed to lay this foundation because, and I really wanted to mention, you'll see why I told you, is there any coincidence that after 3 years of massive accumulation and repatriation by the Western bank, or by the banks in Europe, then the BIS said, by the way, it's tier 1. No, there are no coincidences. They knew. So let's first talk about silver, and then we'll talk about gold. So we've set the foundation. I believe that someone got to Trump before he won the election and told him that this stuff is happening. Maybe he watched my podcast. Joking. But that the nations in the global south have become coordinated and motivated. They used to be third world. They're not anymore. India, China, Russia, Saudi Arabia, all the countries in the Asian countries like the Southeast Asia, which, by the way, those countries, the acronym is ASEAN. They represent twice the population of the United States, about 800 million people. They're China's largest trading partner by far. All of these countries have been buying gold hand over fist. They stand for delivery. Poland, the largest accumulator of gold over the last several years. Turkey, Eastern European countries, they're all hand over fist buying gold. Okay, and silver. All right, so let's talk about silver. Someone said to him, if we don't get on with this, if we don't do the same thing, we're dead. We're dead. They're draining the exchanges across the globe and standing for delivery. No one ever stood for delivery. They are beating us at our own game. We suppress silver for the military-industrial complex, and I will get to why we suppress gold when I talk gold. But they've both been suppressed by the West for illusionary reasons, and all of these countries said, but you know what? We can stand for delivery. We're not third world anymore. We're coordinated, we're motivated, we're sophisticated, we're wealthy, and for several years you have seen the bleed down of the COMEX, the bleed down of the LBMA, even the bleed down of the Shanghai market, and it's all going eastward, all of it. And it's not going to come back. In fact, right now, for the last better part of it, almost a year, the premium in Shanghai over the Western price, right now it's about $11 or $12, right? So if you're a silver is priced $12 higher, and if you are a big trader here in the West, you could buy 20 million ounces of silver, exchange for physical, deliver it to China, to Hong Kong, there is a COMEX contract that goes to Hong Kong. A truck picks it up and brings it to the Shanghai Metals Exchange. They will pay you a $12 premium on 20 million ounces. You just made what? 340 or whatever million dollars? $240 million. You're buying how about 50 million ounces at $12? Right? You just made What do you make? $600 million? Is that right? I think so. You just made $600 million. You're buying a yacht in Tahiti, right? So, but normally when you talk about arbitrage, when there's arbitrage, you buy here and sell here at a premium. So many people do that it ends. It just, the inequity ends. They keep it. That sucking sound you hear are the Chinese saying, come on, give us your silver. We'd be happy to buy it at a much higher price than you guys are putting it on COMEX at. Anyway, so someone gets to Trump and tells them all this. Now, here's the part where I'm going to start to connect the dots. I know a lot of what I said right now is kind of where are you going with this? All right. So every month for the past 16 months, November, December, January, about 15 to 16 months, we have seen between 40 and 70 million ounces of silver. We'll talk gold in a moment, since you wanted the long version. Between 40 and 70 million ounces of silver have been delivered into the COMEX market every single month. Now, the media, who has their head so far buried up their ass, all they talk about is, well, finally they start talking about the price going higher. They talk about the price. They say, well, maybe it's overbought. Technically, is this 1980 and 2011? They always paint it poorly, but they notice the price. But what they didn't ask is, who the fuck is standing for delivery every single month in COMEX, which is a anomaly and outlier to the nth degree. It's 4 feet of snow in Death Valley in January. And if that were, in August, and if that were to happen, you wouldn't see snowmobile dealerships pop up in Death Valley along the highway just because there's 4 feet of snow there in August. People would say, wow, that's an anomaly. And this is an anomaly too. No one is saying who is standing for a delivery every single month. Now, without fail, and you're talking billions of dollars worth, billions and billions and billions. Now, I could stop right here and say, that's all you need to know, because these people who are doing this every month, importing and standing for delivery into the United States, are the most well-funded and, more importantly, well-informed people on the planet. They do not fuck around. Like Wayne Gretzky said, I don't skate to the puck, I skate to where the puck is going. Now let's go back to what I was saying earlier about the banks buying in 16, 17, 18, and 19. Then, oh, by the way, it's now tier 1. Every month, since at least a year ago, November, maybe October, we've seen this kind of volume, which is an outlier. Never happens. It hasn't stopped. Month over month over month over month over month over month over month, billions and billions and billions and billions and billions. And no media attention. No media attention. Not anyone saying, who is doing this? I've been screaming it on every podcast. That's all you need to know, period. I could drop the mic right there and say, when people at that level do this, that's all you need to know. But let's keep going. So all this happens. And do you think that it's a coincidence, by the way, that we just found out that the Trump administration has since then reclassified silver a critical mineral? After 16 months of nonstop, massive inflows that no one has ever seen before. Oh, by the way, it's critical. Oh, by the way, we are going to put state-sponsored price floors underneath the price of silver to incentivize domestic mining, and we are going to accumulate a government stockpile, a United States stockpile, which we don't have. Is that coincidence? Now, who could be standing for delivery? I want to give you an example of something, what I mean by this. So right now there are 3. What's the date today? Today is Tuesday. There's 4 days before the February gold contract has to deliver. So the way that the contracts work is the last day of January, the February contract opens up, goes off the board, and you can start taking delivery. By the end of February, it has to be delivered, or things get rolled forward to the next contract, which would be March, which is right now. Also, March goes off the board the last day of February. So that last day, one goes off the board March, and you can take delivery through the whole month. February goes off the board the last day of January and has to be finalized by the last day of February. 4 days before, is this gold? Well, yeah, it's gold, but let me see if I have silver. I think I do. Hang on. Yes, I do. Okay, so this is the part that's really crazy. One COMEX silver contract represents 5,000 ounces. So, silver leaving the vault in for the February contract. So a lot of the stuff is delivered into COMEX and it stays in COMEX. Inside of COMEX, and I'm throwing so much stuff at you, I hope people are taking notes. Inside of COMEX, there's two categories. COMEX is the market, the price-setting mechanism of the globe for commodities. There's registered, there's eligible. Now, my company, Miles Franklin, has 8 Brinks facilities that we have programs in around North America. One of them is COMEX, is a COMEX facility. There's, I don't know how many COMEX warehouses. One of our Brinks facilities it's JFK, New York. And I have people with millions of ounces of silver 1,000-ounce bars in that facility. Those are considered eligible. That means they are eligible to be moved into registered, but they're not for sale. They're being held. It could be a private investor like my clients, could be a Tesla, a Samsung. They're not for sale. They're in the vault. That's it. If I want to sell them, I can move them out of eligible into registered. Registered are the bars that are backing the contracts, okay? So anyways, there's 4 days left before the February contract has to be off the board. So far, for the February contract, there's been 4,639 contracts that have been delivered, coming from London, Switzerland, wherever. At 5,000 ounces apiece, that's 23,195,000 ounces so far. It's a small delivery, but it's not a primary delivery month. So, still 23 million times 80 is what? 3 billion, something like that. 2.5 billion, 2.4 billion, whatever. But here's the interesting thing. Actual February withdrawals out of COMEX, 38,082,934 ounces. So what I'm saying is the vault withdrawals are 164% of the February delivery demand so far. That means more metal is being pulled out than delivery alone can explain. This is massively unusual and is a classic sign of massively tightening physical conditions. That's like, deliver it and get it the fuck out of there because there are problems, is what they're basically saying. Now, let's just figure this for 1 second. If a mint box of Silver Eagles, which is 500 ounces, weighs 42 pounds, who in God's green earth just withdrew so far in the month of February 38 million ounces of silver? 38,082,934. You're talking an armada of semi-trucks. So where the fuck is it going? And why is nobody saying, who the hell is doing this? Why am I the only one screaming? Who's doing this? Where is 38 million ounces of silver going? Now, I would argue, what did the government say? Oh, that's right, it's a strategic mineral. I would argue it is the Exchange Stabilization Fund, which is a offshoot of the U.S. Treasury, which if is accumulating this stuff on behalf of national security, it doesn't need to be reported to the public or to Congress, at least not yet. It gives them the ability to do it quietly. So let's go back to what I was saying. Every single month since he won the election, we have seen between roughly 40 and 70 million ounces stand for delivery. Now, not all of it is leaving, but here in February, more is leaving than is being delivered. So anyways, we are seeing, now let's talk about the March contract. The March contract currently has an open interest. Now, March contract goes off the board trading-wise the same day that February has to be over in 4 days, right? And that contract, that contract right now, open interest means those contracts that are still open. Now in February, the majority of the contracts that were open at the end of January have stood for delivery. Normally 1% or less does. So who's standing for delivery in massively outlier fashion? Okay, but so here we are in March, and you'll see the problem that we have here. There's 47,847 contracts as of yesterday still open. That represents 240 million ounces, just under 239 and so. In contrast, the total registered silver category, what was registered? Those are the bars that back the contracts, stands at 88 million. Now let me do that math again. There's 240 million ounces that are open that could say, I want delivery in 4 days, versus 88 million ounces of bars that could be delivered. I got 88 ounces here, but 240 million, 88 million here, but 240 million say, well, I want my bars. Where's the problem? Do you see the problem? That's called rehypothecation. That's called Bernie Madoff. That's called selling the same asset over and over and over again because no one ever stands for delivery. Now, what I will say to you is this is a paper Ponzi scheme. This disparity is a looming game of musical chairs. Indicates a severe shortage in physical metal to satisfy said paper claims. So the point of it is that you have a system that is breaking. Why is it breaking? It's breaking because there are people around the globe, and it started with the BRICS nations, who very slowly, methodically, and diabolically have been using the suppression of the Western paper markets against us for a very long time. You go back and watch 100 of my podcasts, you'll hear me say that exact phrase for the last 3 years. They have been standing for delivery. No one ever stands for delivery. They're draining the world's exchanges. And they're doing so. People say, well, why doesn't China or Saudi Arabia just spend $5 trillion and buy everything? Because just like that, the rules would change. The game would be over. The exchanges would blow up. But if I take a piece of paper and every morning when you wake up, slice you, and then slice you, and then slice you, and then slice you, and then slice you for 5 years, you wake up one morning, you've bled out. You just didn't notice it, right? And that's what they've done. Now, why did the price of silver collapse? And then we'll get to gold. But bear in mind one thing. What I've talked about so far is that there is a race right now. In London, there's somewhere in the neighborhood of 2 billion ounces, in outstanding paper contracts against a 140 million ounce stockpile of silver. What could go wrong? Possibly. Tell me. 140 million to deliver, 2 billion think that they can stand for delivery. This is what has happened. This is what happens when you play a game. Now, for many years, these countries were unsophisticated. They would never challenge the West. They didn't have the money. The West ruled the roost, right? I mean, I'm 55, I'd say over half of my life, China and India would have been called third world. Not anymore. And they understand what has been really perpetuated by the West. The suppression, I'll get to why they suppress gold in a moment, but they suppress silver in my mind specifically because of its needs for the military. But now it's also, electronics, AI, digital, it is critical, right? And it's found in nature in a form called epithermal. Your skin is epidermis. You go to a silver mine and you kick over a rock, you'll see silver. It's that close to the surface. And the big deposits have been exploited years ago. So what happens is that, it's becoming harder and harder and harder and harder to find. This is the 6th year in a row of at least a 200 million ounce shortfall between supply and demand, or between mine supply and demand. And the majority of the silver mined last year came from byproduct mining of zinc, copper, and lead, about 80% of it, where these are companies who have no financial incentive to look for silver. Only 20% came from companies that mine silver because it's disappearing. So the government says, holy shit, if we don't have this, we don't have a strong military, we don't have strong AI, This is why the West has been suppressing it. So remember, I would short it here and I would send it, buy long from you. So I believe, as far as silver is concerned, Trump got together with the banks and said, in both gold and silver, we are going to tell the world it's tariffs. You're going to call your buddies. You guys are idiots for having such a big short position. You're going to fix that. Now, the Commitment of Traders report, as of January, shows that the Western banks have gone net long, the banks in the United States. Net long. They've never been net long that I can remember, ever. And the Economic Times says the exact same thing, put out a report saying net long. And that JP Morgan flip-flopped and covered 200 million ounce short position in silver and has been buying copious amounts nonstop. Why would they do that? Well, I believe they have put I'm going deep here, so you got to forgive me. There's a theory out there that Tom Luongo has perpetuated that I believe sounds accurate, that Trump believes that the European aristocrats were involved with the suppression of the election interference, and the color revolution. They did not want Trump in there, so they are the ones that stood behind it. The big old money in Europe, they didn't want him. They look at him as a threat. You can see what he's doing with NATO, the sanctions. They didn't want him. They wanted to bring America down to an equal level and do so by running a campaign of color revolution, wokeness over meritocracy, election interference, border issues, two-tier justice, all this stuff that made the people in the world say, what the fuck happened in the United States? So, and Canada, by the way. And I'll talk about that in a moment. So the theory is that he wants to expose the European banks. So the first step is to reshore all the metal that you have been in collusion with those European banks for 50 years. Tell your buddies, hey, listen, Ben, he's fucking crazy. This is a one-way tariff. We don't know if they're going to be tariffs. I got all these open positions short here. I never send all the metal back, but you got to send it back. And because it's priced higher here, you'll make a VIG because it's arbitrage. Your contract there, it costs more here to deliver, so you'll make some money. Send it back. I got a cover. Don't worry, it'll all go back like it always does. All the metal comes back over tariff threats. I'm screaming since December. It ain't tariffs. It ain't arbitrage. It's reshoring. All this metal comes back every single fucking month. Now, I'm using profanity because no one else talks about it. I want this to sink in, right? Every month, billions and billions and billions, and not one idiot on mainstream news has the journalistic integrity to say, who's doing this? This is very unusual. This is really unusual. And look how much is leaving. Where's it going? Because when you pull 50 million ounces of silver off of COMEX and by an armada of trucks, it ain't ever coming back because it's a pain in the ass to do so, and they would all have to be reassayed to get back into COMEX. Ain't gonna happen. Where's it going? Who's taking it? That question has never been answered. So all this metal comes back. The Commitment of Traders report says as of January, the U.S. banks are net long. Now, that doesn't mean totally long. That means I could have 11 long and 10 short. I'm net long by one. I'm more long than I am short. So things are starting to accelerate. All this metal comes in. It's classified classified a critical mineral. And we see this massive sell-off. Why would it have happened and how did it happen? It happened because everyone on COMEX, it's not just the monster players. There's a lot of funds and private traders who think maybe they're very well heeled. Maybe they have a couple $1 million in their margin account and a balance of $20 million on their account. They think they can play in that sandbox. So they see silver taking off, going up week after week after week after week as it did. They say, let's get on top of this. And they buy COMEX contracts. Now, 2 weeks before Christmas, it cost me about $15,000 to hedge a 5,000 ounce silver contract. So for me, if I have 2 million ounces in my warehouse, I want to hedge that at 5,000 ounces a piece, right? what is that? 2,000 contracts I need to buy, right? I need to have 2,000 times 5. I need to have $10 million in my margin account, okay? And to hedge that. The day before Christmas, they raise it from 15 to 18. The day after Christmas, they raise it from 18 to 21,000 to hedge. Now, if I don't have, let's say I have all those contracts, right? That's a 35% increase. If I don't post it within one day, they liquidate them. I have to do that to maintain my hedge. So I just have to put more money in my margin account, or I get margin called. And now it's almost 50,000 today. What did that do? That killed the open interest. Now 2 weeks ago, open interest was 400 million ounces. Now it's 280 million. 120 million ounces in open interest contracts. Bye-bye, they're gone, they close out. Because all the way up, if you don't have enough money to cover that position, maybe you're a very well-heeled private trader and you're like, we're making so much money on these contracts, let's buy some more. Just have to have money in your margin account. Margin increases, and they're doing it specifically to target on COMEX all of this levered money. So the cost goes up considerably to hedge your position, up 300% in 2 months. And that created an environment where 120 million ounces of silver, people who controlled those on COMEX, much of it had to sell to cover their margin accounts because they can't keep throwing money in there. They keep raising it. It's getting too expensive. So selling begets selling, and the price falls. And as the price falls and you're hedged, you're going to get a margin call because it's falling and you are hedging yourself, right? And so you're going short, but the price keeps falling the opposite direction. You're in trouble. You have to sell. So all the selling that started by raising the margin triggered a cascade of selling all the way down, right? And now you have the price that has collapsed, right? And in a matter of a day or two, the largest fall ever. How about what happened at the bottom, right? Who engineered it? Well, JP Morgan covered 800 contracts at the exact bottom. And how about SLV? SLV added 38 million ounces of silver into the trust at the exact bottom. How'd they do that? They wrote something saying that there could be a lag between the time your order is accepted and the time the shares are actually issued, because and the shares can only be issued when an authorized participant, a commercial bank, puts the silver into the trust because of the volume of inflow. And they did that during Silver Squeeze. BlackRock did. On a Saturday night, they changed the prospectus. So 2 days before silver's $120, they sell 38 million shares or ounces and then collapse. And then in comes 38 million and the shares are created. That worked out pretty well, didn't it? What they tried to do is shake the bushes, and everyone who was margined, most of them let go and fell, price collapses. And in come the big boys and girls, cover shorts, put money into SLV, which, by the way, can be taken out easily, privately, by those commercial banks through what's called share redemption. And they continue to plunder SLV by doing that. But at the same time, what did they do? They just covered their shorts, but who's been standing for delivery? We don't know. Do you think these people that are standing for delivery on billions and billions and billions and billions give a flying F-U-C-K what the margin level is? They don't care. They're not on margin. They come in and write a check for $5 billion. Thank you. What is it? The Saudi Central Bank? Is it the United States Treasury Department? Critical mineral? Could be. Who is it? Who's standing for? Do you think they care about what the margin rates are? No. They shook the bushes. So all the levered fell all the way down, and then wadoosh, in comes the delivery at a 40% subsidy to the biggest money in the world. You have shook out all of the speculators and transferred into real strong hands where real price discovery is about to happen. I truly, in my heart and soul, believe we will see real price discovery in silver you have an environment where people are beginning to realize the managed money, which has the lowest open interest right now, the hedge funds, maybe ever, real close to it since 2008, at least, saying that this ain't worth it. You have to have real money to be here if you're going to take these levered positions, right? And I don't think that you're going to find a period of time where no one is willing to play these paper games, because every month they're standing for delivery and they don't care what margin is. And when all of a sudden you get this massive froth speculation in silver and everyone's standing for delivery, and these people think they can beat the big money like the US government, they're reminded that the rules will change on COMEX to protect themselves, and they raise margins and the price collapse, and then massive delivery upon massive delivery upon massive delivery at subsidized prices. Now, this has always worked before people stood for delivery. But now when you have not only the smartest, most well-funded and well-informed traders in the world here in the United States standing for delivery, and the same thing happening all throughout the global south on our exchange and on the LBMA and on the Shanghai market, you can't play these games anymore. We are about to experience real price discovery, as not only has the United States classified silver a critical mineral, strategic stockpile underway, and state-sponsored price floors. The European Union did that last year, and now China, who is the second largest producer of silver in the world, in November said every ounce of silver we make here or mine here stays for domestic needs, and we are the largest refiner of doré bar in the world. We are going to massively curtail exports. There is a race for silver right now. So the price drop down was triggered or was focused on COMEX. It wasn't focused on the people here in the retail market. It was focused on the speculation on COMEX, and I believe they won't do that anymore. This is my opinion, because they really fucked up the economy, because every refiner in the United States got shut down, every one of them. Because if I have $50 million in silver that I bought from the public in various forms, and it takes me weeks to break it down into a meltable form, then to melt it down into shot, and then melt it into bars and coins, it takes weeks. The price has been moving up so fast on their short, but they have to hedge. 50 million they paid the people, 50 million short on COMEX. The price falls by $10, you're dead, but it goes up by $10 on what you sold short, so they're market neutral. They're getting margin called too, massively margin called. The silver price was moving up so fast against their short, they were getting margin called. They had to continue to hedge, put money into their hedge account, and then they kept raising margins too. All the refiners said, I can't take any more business, we're shut down. Every refiner across the United States has been shut down most of this year because of what they did on COMEX, and I think that has reverberated through the economy. My guess, this was kind of a Hail Mary. I don't see them doing this anymore. It is too much of a problem, the systemic nature of gumming up the entire system. So, as far as silver is concerned, and I know this has been a long diatribe, I don't have a time limit, but you might want to break this into 2 segments. But as far as silver is concerned, it is still the most undervalued asset in the world. And the biggest money in the world is proving that by delivery. All I could have just said in 30 seconds, all you need to know is that the most well-funded and well-informed traders in the world have been standing for delivery on gold since 2016, 2017, and have not stopped. And silver over the last few years have not stopped, but now it's moved to the United States. And it's a whole different ball of wax when the biggest and most well-informed, I keep saying well-informed, they know where the puck is going. You do not spend 9 figures every month, and no one talk about it, and much of it leave if you do not know what's coming. They do not fuck around at that level. Okay, there's your silver story. And silver, it is vital. And now it has been recognized as such. And I think they had to shake the bush one more time. Let's talk about gold for a moment. I believe that the United States is going to default on the world reserve currency. I do. And they will use gold, in my thesis, as a way to hopefully bring back manufacturing. Why do I say that? Well, let's start with the obvious. We are 38 trillion in debt. A trillion seconds ago was 38,000, what was it? 38,000, God, I used to say this so many times. 38,000, well, let me just look. Let's look and see. How many years ago was a trillion seconds? That's not right. How many years ago was 1 trillion seconds? 31,688 years ago. That's a trillion seconds. 31,600. You have Neanderthals stalking the plains of Europe, right? So we're 38 trillion in debt. That doesn't include Medicare, Medicaid, Social Security, government military pensions. The off-balance sheet entitlements and obligations are 200 trillion roughly. We're over 200 trillion in debt. We're done. We're over. If they included that, we'd be so far past debt to GDP ratio of any country that has ever come back. We're at about 120% debt to GDP. There's never been a country that crossed 130 that didn't outright default or hyperinflate. So we're broke. Okay. We're uneducated. Ray Dalio just came out and said that 60% of the United States has a reading proficiency under that of the 6th grade. Interesting. So we are broke. We're uneducated. We make nothing. We've offshored our manufacturing years ago, right? So we're broke, we're uneducated, we make nothing. But wait, just in time, here comes AI. Just in time to kneecap God knows how much of the labor force. My son, who now works for me, was working at Price Waterhouse, getting paid $80,000 a year to analyze a balance sheet of real estate investment trust. What the hell do they need to pay a kid out of college $80,000 to analyze balance sheets of as a what was his title, what's it called, a forensic accountant? Why do they need that when AI does it for free? And done and it takes all the information from all over the place to get there, whereas a kid out of college get paid $80,000 with the benefits and sick time and all that stuff. They won't. It's going to kneecap white-collar jobs. 50% of entry-level jobs are expected to be gone within a year or two. And who knows where that takes us. So we're broke, we're uneducated, we make nothing, and you will have massive efficiency at the expense of millions of jobs. You will have very, very wealthy people and everybody else. This is you'll own nothing and be happy moment. And I think Trump took a look at that and said, this ain't going to fly. Now, if I'm right and there is any nobility in what he's trying to do, he should go down, if I'm right about this, as the best president in the history of the United States. And I say that to you. I know he has a lot of detractors. A lot of things he's done could be done with more class and charm. Put all that aside. Let's look at the reality. Our kids and our grandchildren are fucked. Completely and totally screwed if we don't do this, right? What future do they have? We are the largest debt in the history of the world, $200 trillion plus. My mentor, Richard Russell, used to say they have 2 ways to get out of this. There's 3 ways to get out of any problem like this, indebted. 1, you produce your way out. You produce more than you consume. Check, that ain't going to work.
Not going to happen.
Number 2, you inflate the way that all countries have done, like Weimar Republic, Germany, hyperinflate. 3, you default. That's it. He used to say inflate or die is what the Fed has to do because he knew the manufacturing had been offshored years ago. So how do we do it? What do we do? Now, there was an economist, the chief economist for the Biden administration, one of the biggest morons I've ever seen in my life, when he tried to explain how treasuries were created. If you saw it on X a couple of years ago, his name was Jared Bernstein. It's a funny, it's humiliating, but it's funny to watch it. Google it, how Jared Bernstein creating treasuries. But the one thing he did do was write a report called Dethrone King Dollar several years ago that was picked up in all the major newspapers that says we cannot be the world reserve currency anymore. It is a privilege we have lost. Vice President Vance said the exact same thing recently on White House letterhead, talked about it. And in both cases, both people cited something called Triffin's dilemma. Triffin's dilemma is the economic theory that says if you're the world reserve currency, you will never have a trade surplus, ever. It's impossible. Because if the entire world needs dollars to buy oil and transact global business, we cannot provide enough of said dollars to said countries just through trade alone. So what happens? They need to sell their currency in the open market, which devalues it against ours, to buy our currency to transact business. Makes our currency higher, their currency lower. And over time, as this continues, you have an environment where their currency gets much weaker against ours, and manufacturing says, I can move my company Cambodia to Vietnam, to China at 1/8 the cost. So what happens is, as the global reserve currency, over time, you hollow out your manufacturing base. It goes to places at a significant discount. This is the globalized world we live in, and I would argue we're moving away from globalism to mercantilism, protect our own. And that's what he's doing, because not only did Vice President Vance specifically cite Triffin's dilemma, so did Jared Bernstein, Biden's chief economic advisor. In reality, what has it done for us over all of these years? If we weren't so massively indebted, every country has had to take our paper that we print to sell us their goods and services, which is great, and we pay them dollars for it. We get the goods. When you're choking on dollars like they all are, the place to put them is not to leave them in dollars earning nothing. You recycle them and put them in U.S. treasuries. So you get paid a return in safe liquid treasuries, right? That's kept interest rates low. That's kept asset prices high, and it's kept the goods we buy at Walmart cheap. Been a great privilege until we screwed it all up with massive fiscal irresponsibility. And now, because we produce nothing and we're so massively in debt with no way out, our future is very bleak for our kids and for our grandkids. When AI comes to kneecap the majority of these jobs that were once plentiful, they will be gone forever, right? I mean, you go to even the Minneapolis-St. Paul airport. I live in Florida, but I was in Minneapolis the other day where our corporate entity is. And every restaurant throughout the airport are, instead of having waiters or waitresses, they're iPads. You go to the McDonald's there, it's a giant iPad. You go to the checkout, or when you drive, when you park your car and you come out, there's 40 gates that are all credit card and one with the teller. So all these jobs are gone, and they're being replaced with efficiency in ways like artificial intelligence or anything that the expansion of technology that is in the place of human labor, right? So you get greater efficiency for the business owners at the expense of all these jobs. So what do we do? How do we do it? Triffin's dilemma says we can never sell product to the world. Our currency is too strong against others, that is. But what do we do? All right, this is where gold comes into play. How do we bring back manufacturing? That, to me, is what the central focus of gold is with this administration. We already covered silver. It has been suppressed forever by the West because of military and other things, and that's changing now. Now it's critical. All this metal keeps coming in month over month over month and delivered. Okay, I buy that. Now gold. How do we bring back manufacturing? Well, we can't, right? Even if we do, they can't sell it to the world in this very strong dollar as the world reserve currency. Well, what if we quietly default on the world reserve currency? We have no choice, right? We don't tell the world we're doing this yet. I mean, we're still spending $1 trillion worth or creating $1 trillion in debt every 100 days. Not very fiscally sound. We bring Doge in. They find $2 trillion we can save, and we can't agree on more than $200 billion. That's 30 hours of spending by the government. So what do? How do we bring it back? Here's how we bring it back. First of all, you have these people like Vance and Bernstein saying we can't be the reserve currency anymore. What does Trump say over and over and over again? We need to bring back manufacturing. Manufacturing, it's increasing. The numbers are increasing. We're bringing back manufacturing. Okay, but that ignores the reality. But what if there's something behind the scenes? How do we do it? There are two ways that they're going to do it, I believe. The first way is to, and I'm going to kind of skip a step here just to explain. The first way would also be to bring back all the gold. Why? I'll show you in a minute. But how do we bring back the gold, right? Oh, same thing, tariffs. It's tariffs, you guys. So we need to cover these shorts on gold too. So send it back. Don't worry, he's nuts. Send it back. We're friends, you and I,
Hmm.
but I was told quietly, I being one of the banks, you're going to bring your shit back from London. You're going to get out of this problem. You're not going to tell your buddies in London or any of the banks you deal with, this is an existential threat to this country. Bring the gold back. Don't tell them what you're doing. Fine. All this gold comes back. Huge amounts every month. Billions and billions and billions. And same thing with silver. Every single month since he won the election. Less than 1% ever stood for delivery. Every single month, billions and billions and billions and billions and billions are standing for delivery. Where's Jim Cramer, that idiot? Where is anyone with enough journalistic integrity to say, what the hell is happening? Who's doing this? It's not just silver, it's gold too? Billions? Who's doing it? Nobody. Nobody. Is it the Exchange Stabilization Fund? Again, on behalf of the U.S. Treasury? Maybe. How do you do it? Okay, here's how you do it. Have you heard of the Genius Act?
I have not.
Well, you're going to now, and your people who are hearing this should research it. The Genius Act is law. It passed. It's going into effect in January of next year. The Genius Act in the United States says that anytime money moves from January of 2027 on, you'll never send a check again. You'll never write one out again. You'll never send a wire ever again. Anytime money moves, period, it will move on a blockchain network and instant settlement. And it will move via stablecoin. So for people who aren't real familiar with that, we'll make it real easy and say the blockchain network is a highway and the stablecoins are cars. If I owe you money come next year, a stablecoin is, I'll look at my bank account, nothing looks different. I'm going to send you $1,000. So when I send it to you, a stablecoin is created. $1,000 in value is attached to it, backed by 90-day or less short-term treasuries. So point number one, you've just created synthetic demand for the short-term treasury, not organic demand where people want to buy it, synthetic demand. Whether you're buying a pack of cigarettes or a new house, it will all move via stablecoin, all of it. Instant settlement. You'll get that money right away. So I send it to you. The stablecoin burns when you receive it. You have your money. The treasuries that back the stablecoins, 90-day or less short-term treasuries, they just passed something called the Clarity Act, which says the issuer of the stablecoin cannot transfer the benefit of the interest to the holder of the stablecoin. They're doing that to protect the banks. Because if all of a sudden private enterprise who issues stablecoins like Tether can give the interest out, they're backed by treasuries, everyone will leave the banks and go to private enterprise earning higher return without the banking problems. So you cannot transfer the interest. So anytime money moves, period, anywhere, they will be backed by stablecoins backed by short-term treasuries, 90-day or less. Creates synthetic demand for the front end of the curve, pushes the overnight lending rate low, neuters the Federal Reserve. Federal Reserve, one of their deals is to mess with interest rates to maintain, stable pricing. And they do that by messing with the short-term interest rates, right? Well, if money movement is going to do that, what's that going to do? I think it significantly curtails what the Federal Reserve has to do on monetary policy because they can only control the front end of the curve. They can't buy the back end. That's not what their charter allows them to do. They can control the overnight lending rate. Well, if anytime money moves, it buys short-term treasuries, that's going to drive treasury yields into the ground, right? You follow me? Okay. So that's another thing. He's challenging not only, remember, I never talked about the Luongo theory. Damn it, I forgot to mention that, where he thinks that the European banks are in trouble. Well, if the U.S. banks are net long in silver and gold and the European banks are left holding the bag, he's out to get them, is Luongo's theory. And the way to get them is to blow up these banks who are short and the U.S. banks quietly exit stage left, telling them that it's not, it's about tariffs, but that's not what it is. And now they're exposed. Like TD Bank, by the way, before I get back to gold, TD Bank 3 weeks ago, publicly said we think silver's going to $40, took out a huge short position, got stopped out at $92 and had to cover it. They're massively short in London. Tom Luongo's theory is he's out to get the European banks for election interference and the color revolution, and he will do it by blowing up the LBMA. We'll see if it's going to happen. They're a T+1 exchange, T+1 day. You should get your bars. They've been saying all of last year, T+8 weeks, shortage of manpower and trucks. Bank of England has. Okay. So in other words, they're caught with their pants down. It's getting close. And the systemic nature of one of these banks' failure to deliver, like Deutsche Bank, they're involved in everything from equities, Forex, treasuries, everything. And if they failure to deliver in gold, what does that say about everything else? It would blow them up. All right, so back to gold anyway. So we've reshort all the gold, billions and billions and billions and billions and billions and billions and billions of dollars worth. We can't be the reserve currency if we want to reshore manufacturing, right? The Genius Act creates short-term synthetic demand for the Treasury, 90-day or less, keeps interest rates low on the front end of the curve. The interest is not transferable. Well, where does the interest go? Tether owns over almost $15 billion in gold that they bought recently, with all of the interest that they are earning by issuing the treasuries on all their stable coins. It's the largest stockpile of gold in the world outside of central banks. Now, here's where a little bit of the supposition comes in. Their new branch called USA Tether, which is already Genius Act compliant, will be the primary issuer of these stablecoins. Now, American Express will issue them, Bank of America, Visa, MasterCard, they'll all issue stablecoins. But they're all under the same regulations of the Genius Act, backed by 90-day or less treasuries. But let's look at USA Tether for a minute. USA Tether, again, Tether's accumulating all of this gold. The CEO of USA Tether, this new offshoot, is a man named Bo Hines. Bo Hines was Trump's crypto czar through August and his advisor. Just like Stephen Mirren, who was Trump's advisor, who took the vacated spot at the Federal Reserve a few months ago when that gal got kicked out for improperly insider trading. He is the architect of the Mar-a-Lago Accord. The Mar-a-Lago Accord, he wrote it, talks about, and he uses a little bit more Bitcoin, but the whole theory is to massively devalue the dollar to bring back manufacturing. Keep that in mind. His advisors are moving into these important positions at the Fed and USA Tether. So here's the wink, wink, nod, nod. All of this money comes in, and anytime money moves globally in dollars, it's backed by short-term treasuries. The interest is not transferable. The issuer keeps it and buys gold. Now, why? Why would Tether be buying huge amounts of gold? Wait until the Genius Act moves. They'll quadruple that amount. Way more. Why? And I believe Trump said to Tether and to Bo Hicks, you are going to buy gold for us. And that gold is going to be purchased by the Treasury Department, by the Exchange Stabilization Fund for national security. You guys will be as rich as can be forever. Bo Hines, not Bo Nix. He's a football player. Sorry. Anyways, you'll be rich beyond your wildest dreams, and you're going to help support the United States and bring back manufacturing. I'm going to connect the dots for you, I promise. So all that gold that you accumulate on behalf of the U.S. Treasury quietly, we don't want the Treasury buying this and having a footprint. We want you to buy it with the interest that you keep. That's why the Clarity Act says no transferring of interest on stablecoins. To buy it, you're going to put it into gold. You're going to quietly deliver it to the U.S. Treasury. You're going to be paid money. You will be richer than you can ever imagine. Great, everybody wins. Why would they do that? Why would rising gold mean anything? When Roosevelt confiscated gold in 1933, gold was $20 an ounce. He paid everyone $20.67. 67 cents was a big vig when a dozen eggs were a nickel. Everyone was happy. Then he immediately devalued the dollar by 40% and made gold $35. When you talk about Triffin's dilemma, it says the dollar is too strong. So if we measured the dollar against the dollar index, well, it was down 10% last year against a basket of currencies that are continually devaluing their currency against ours. Remember, they all have to devalue against ours to buy dollars, to trade, to sell us product. They want to devalue their dollar against ours either to sell us exports, so they'll sell their currency in the open market, buy more dollars, buy treasuries. Their currency falls, they can sell their exports to the United States. Great, that's cool. And they may need more dollars to transact global business. So to measure the value of the dollar against the dollar index is measuring the value of the dollar against a melting ice cube. Stupid. What did it do? It was down 10% last year. What was it against gold? 80% down. In silver, 150% down. Let's go back 20 years. In 2005, the average price of a house in dollars was $240,000. Gold was $450. Divide that in, it's about 510 ounces. So 20 years ago, I could have spent 510 ounces to buy my house free and clear, or not. So I say, no, I'm going to put it under my mattress. Those 510 ounces are nothing but dust. Here we are 25 years later, or 21 years later, rather. In 21 years, the price of your house doubled. It's $500,000 now. Average house in the U.S., $500,000 from $240,000 in 2005. Good investment. You doubled your money, right? In dollars. But wait a second. Did you? That gold that's under our mattress, 510 ounces at $5,200. Holy shit. That's worth over $2.5 million. That buys you 5 houses today. So did my house go up? Did it double? In dollar terms, it did. But how about in gold terms? It devalued by 500% in 20 years. You can buy 5 houses on an asset that pays no interest. Now, what is the proper way to measure the value of the dollar? Is it by the dollar index or by gold, right? And it's happened before. Nixon did it when he shut the gold window in 71 at $35 an ounce. The next year, he made it 38, and the following year, 42.22. In each case, he devalued the dollar. Okay, what does devaluing the dollar do? It allows us to sell manufacturing across the globe. If it were really devalued, that's exactly what it would do. It would also make it a whole lot easier to pay off the debt, right? Because we don't make anything, we're broke, we're insolvent, we're uneducated, and here comes AI. We got to bring back manufacturing, right? How? Well, first step, devalue the shit out of the dollar. How do you let that happen? Well, the Genius Act. Every single time that money is created, you'll have an interest-bearing treasury behind a stable coin that the interest isn't transferable. So if they buy gold, let the price of gold go to the moon. Who does that benefit? Every central bank in the world who's been buying it, yes. How about the United States, who has to devalue the dollar and has reshored all the gold? Ooh, that's interesting. But this is just one part. So you continually devalue the dollar by raising the price of gold higher and higher and higher and higher. You have synthetic demand for the front end of the curve, which will incentivize loans and things that the Federal Reserve will lower rates, so people will be more apt to take out a loan and to stimulate business and stuff. But how about the back end of the curve? Isn't that really where it matters? The 10-year treasury, et cetera. That's where all the big money is invested. What do you do about that? Well, this is where Judy Shelton comes into play and her thesis. Judy Shelton has been on my show twice, once with me, once with Michelle McCory. And in both instances, she has publicly said the same thing, as she has said ad nauseum on all the interviews she does, on her X channel, in her best-selling book, Good as Gold. She talks about the same thing, and that is the following. And if you watched Trump the other night, all you kept hearing was July 4th, July 4th, July 4th, July 4th. What is July 4th? She said, Andy, July 4th is the 250th anniversary of the United States, and President Trump said to me in no uncertain terms it is the biggest day of his presidency. And he wants to, on July 4th, reestablish integrity to the U.S. Treasury market. He will back the back end of the bond market with gold, starting with the 50-year Treasury. ultimately going 30, 20, 10, and 5. The 50-year Treasury will have a 1% coupon interest or redeemability in gold. The 30, 20, 10, and 5 will have 0 interest, redeemability in gold. Now, before I connect the dots here, Van Eck funds. Van Eck is a company like, it's no different than, let's say, what would be a good one, like Templeton funds or any of these mutual fund companies. They are a very, very wealthy, famous fund company, investment company. They issue stocks and mutual funds and investments. Van Eck says they're just last week or 2 weeks ago, their emerging market bond team says if the U.S. dollar loses reserve status, gold could go as high as $180,000. Okay, I didn't say that. They have no dog in the fight. That's what they say. So we've brought back all the gold. Okay. We've created the short-term movement of money, synthetic demand for the Treasury, take all of that interest and buy things like gold, pushes gold way up. That is the way you devalue the dollar, and it keeps going higher and higher and higher and higher. That we've just brought it all back. Isn't that convenient? Gold goes lower. I mean, the dollar goes lower, 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 lower. So now we can sell product to the world. And a devalued dollar was down 10% against the dollar index. What if it really falls? Now we can do what they've done to us, but how do we get manufacturing back? Oh, I got an idea. Gold-backed bonds with 0 coupon, 0 upfront borrowing cost. So I sell a $20 million bond to build a $20 million facility. And that bond is due in 20 years, 20 million worth of gold in 20 years. Now today at $5,000 an ounce, in 20 years, I would owe them $4,000 or 4,000 ounces of gold, right? What about if Van Eck is right and you see gold as high as 180,000 bucks, just for the sake of argument? 180,000 into 20,000 is about 111. So in 20 years, I owe 111 ounces of gold instead of 4,000 ounces because the price keeps going higher and higher and higher and higher and higher and higher because of the Genius Act and the interest that is created, which allows me to buy more and more and more and more. And as the dollar goes higher, because the dollar is what commodities are measured in, gold goes higher. It's not going higher. It's the dollar falling further and further. Just like we talk about the house. Did your house double or did it really lose 500% in terms of value? You measure any asset in gold, any asset in gold since 1971, and you'll see it takes less ounces of gold to buy that asset than it does dollars. The dollar is falling, gold is staying still. Gold is the barometer, any asset. When Trump is talking about Dow 50,000 and can't believe it. When he took office, it took 16 ounces of gold to buy the Dow. Today it's 10, but the Dow's up. How'd that happen? Because you're measuring it in terms of the wrong measuring stick. You have to measure it in terms of gold. And in gold, it only takes 10 ounces to buy the Dow, not 16 as when he took office, even though the Dow went up. So anyways, let's connect all the dots. So now you can bring back manufacturing across the globe in very long-dated treasuries. You borrow, you issue the treasury, and in 20 years with 0 coupon, meaning you're not getting coupons, you're not getting payments every year, you're just going to get a big stash of gold at the end. Great, let's do it. And so now you have 0 upfront borrowing costs. You bring back your manufacturing in an environment of a massively devalued dollar that allows you to pay it back in far less gold in the end, because the Genius Act and all of the movement of money where the interest isn't transferable, you get people like Bo Hines, the CEO of USA Tether, who owns more gold than anyone in the world except central banks, who continues to buy it. You're going to get rich, and all of you at Tether. Remember when Tether was in trouble and then just all of a sudden went away? Where'd it go? I guarantee you, they're the largest producer of accumulator of treasuries on the planet outside of sovereign nations. They're buying our treasuries. They're going to buy the gold. They're going to sell the gold to this exchange stabilization fund quietly because you can't have the treasury doing it. It would be too obvious. And now all of a sudden you get an environment where you can bring back manufacturing at zero upfront borrowing costs, sell your products at a massively devalued dollar to the world. Because if we don't, you might as well look your kids and your grandkids in the face and say you guys are screwed. Period. We cannot be reliant on China to produce everything from aspirin to aircraft parts, or we're dead. Dead. Because we're too far in debt, we're uneducated, AI is going to kneecap all the jobs, and where do we go? How do you pay off the debt? How do you keep interest rates low when no one wants to buy our treasuries? Not only does no one want to buy our treasuries, you could go a step further and say he's doing everything he can to push people away from dollars. Well, that's right. That's what you would want to happen, right? You don't want them taking dollars. You want to default on the reserve status. What are all the countries doing around the world, around the BRICS? They're all trading in their local currencies across the cross-interbank payment system, CIPS, or the M-Bridge. Remember I mentioned those countries in Southeast Asia, the Asian nations, they all just signed up to M-Bridge and CIPS. They are China's largest trading partner by far. By far, 800 million people versus us here at 400 million. And they're all trading outside of dollars using their own currency. So how are they doing it? So the Chinese and the BRICS are establishing a rail of payment systems throughout the Belt Road Initiative, which is the largest infrastructure project in human history. Whenever gold leaves China, it has to leave through Hong Kong. So the Shanghai Metals Exchange said, here's what we're going to do. We're going to help internationalize the yuan. They're building the rails for the BRICS system. Instead of pissing off Trump and calling it BRICS, it's just China. This will all integrate seamlessly with the M-Bridge, which is already operational, and the unit settlement token, which is already operational, which is 40% gold backed, redeemable to central banks on demand. But what the Shanghai Metals Exchange is doing is they are building a series of vaults. The first one just got completed in Hong Kong. Why is that relevant? When gold leaves China, it has to leave out of Hong Kong. So the second vault is being built in Saudi Arabia. How do you like that? The second vault is under construction there. They are a fifth participant in M-Bridge, the BRIC settlement platform. But what will happen is if China, right now, China just made their yuan immediately convertible into gold without having to switch to dollars first. So I'm China, and you're Saudi Arabia, and I buy oil from you, and I pay you in digital yuan over the CIPS or the M-Bridge, cross-interbank payment system or M-Bridge, technology that the West and the SWIFT is not compatible with. You can't sanction me. You can't stop me. You can't kick me out like you did Russia. You send me your oil, but maybe you don't want as much in the way of yuan, even though we do lots of business. You can buy stuff from me, but I don't want it right now. I want gold. I send it back to Shanghai, and I take my gold out of the Shanghai vault in Hong Kong and take possession of it immediately instead of holding your currency. So second vault's being built in Saudi Arabia right now. It'll be a lot easier. They're building them throughout the entire Belt Road Initiative, all through Asia, Africa, and South America. So everyone will trade over networks that are not compatible with the West, strengthening their own monetary ecosystems, settling imbalances in gold. Instead of building our economies, they'll build their own. Everyone goes from a unipolar world to a multipolar world, from one currency to our own currency, build our own ecosystem. And if you don't want it, well, we can immediately convert it into gold. That is where they are going with this. The whole world is moving away. And if you are the Asian nations, 800 million people who have used dollars for everything globally, decide we don't really need as many dollars because we can trade with our biggest trading partner in yuan, digital yuan, and they'll take our currency and we can settle imbalances in gold. So if that means we don't need as many dollars, those dollars are being used to buy things that they're choking on, like oil and gold and silver and rare earths and anything they can buy. And ultimately, those dollars come home to us, creating inflation. But at the same time, if you don't need those dollars, it chips away at the settlement status of the dollar. But when you have all of those dollars, where do they have to go? Typically into treasuries. Chips away at the reserve status of the dollar. And our interest rates, if no one wants our treasuries because of weaponization, fiscal irresponsibility, and all these new rails that are being built around with our allies, with our regional allies who are building a new infrastructure, breaking away from the decades long, centuries long, if you count all the countries in Europe, Western hegemony. This helps us build our own destiny, not the West. We can settle imbalances in gold instead of treasuries. We can't be kicked out of the SWIFT system. We can't have our treasuries stolen like Russia did. Boy, this is great. So they're doing it. We need to do it. It's the same information that Trump received, that if we don't do this, we're dead. Now, I think I've painted a fairly significant picture of silver is more significant than we have been told, and that's why 16 months after record after record after record delivery, oh, by the way, it's now critical. We know that the Bank of International Settlements classified gold tier 1. Is there any coincidence that all the central banks have been buying it and implementing it into their settlement systems? Is there any coincidence that we have been importing more gold than anyone in the world for the last 16 months quietly? No one talks about it. And Judy Shelton says, Andy, in no uncertain terms, he told me he would do this on July 4th, 2026. We'll see if he does it. But if he does, and if they actually try and follow this progression, it gives us a fighting chance, and our kids and our grandkids, to bring back all of this manufacturing, to be the engine of manufacturing, of ingenuity, combine what we do in Silicon Valley to our manufacturing, to be the engine of building things. Now, what would be the only drawback that I can see to this? For a period of time, you will see universal basic income. You will see a whole bunch of people that are really in trouble trying to put food on the table, because this will be very inflationary. And this will also be a period of time where the store shelves aren't as full as they once were. Cheap stuff from China and the rest of the world. But Trump could get on stage and say something like this at his farewell address. We fucked up a really good thing. We did. We were the world reserve currency for a long time. We were on a moral high ground for a long time. But whatever happened to this country, we got wayward. We got wayward in our culture. We got wayward in all these things, and in particular in our management of the reserve currency. It is a privilege we can no longer afford, because our children and our grandchildren need to have a chance at making the same kind of life we all had. And if all the jobs are leaving, what are we going to do? So we need to do this. How do we do it? Here's how we do it. But there's going to be a period of time before we are up and running and efficient, where we will provide assistance to people, universal basic income, so that we can bring back manufacturing. And I would equate all of this to the Shawshank Redemption for an analogy. Andy Dufresne had to crawl through 2 miles of shit to get to the other side. But he did. And there was, when he gets out, he looks up like that and the rain's pouring down. He made it. Well, we can do that too. But when you create the amount of debt that we have, when you offshore your manufacturing the way that we have, when you weaponize the dollar and the treasury the way that we have, when you do all of these things, there comes a point where the rest of the world says, we're done. Now, they're not saying it as loud as they are positioning for it. And I think someone got to Trump. And I do. And I think that they said, we have to do this. There is no other explanation to me why all of this metal keeps coming in the way that it is. So to wrap it all up, and I appreciate you letting me go on for an hour without even stopping. I would just simply say to you that God bless him if this is really what is happening. I don't know it to be fact, but everything that I said, about 98% of it is fact. The 2% is the connecting the dots. Is gold being brought back to back the back end of the bond market, like Judy Shelton has written about in her book? Told me she was his nominee to run the Fed. They're very close. She's an advisor. Is Bo Hines, was he put into USA Tether specifically to accumulate gold and transfer it to the Exchange Stabilization Fund? Is all the gold and silver that has come into this country completely and totally in amounts that would be considered huge outliers? Is that going to the Exchange Stabilization Fund? Is there any coincidence that silver was created a critical mineral or rebranded a critical mineral by the U.S. government? Are all these things just coincidental? Just like all the front running of the BIS reclassification of gold. Was that coincidence? So all of these things together, to me, point to one thing. And that is, if you save in dollars, you will go broke. And if you are not a contrarian and are not able to open your eyes and look outside the box, you'll be a victim. One way or the other, if we do not bring back manufacturing, we will become a third world. And if you go out through time, things move in a spiral. And you could argue that spiral, which I don't know how many thousands of years ago was, in the East, and then all of a sudden started to move to the West and Europe and the United States. We're at the peak. Is it starting to move back again, where all of the wealth and all of the metal and all of the, this significance of these countries becoming wealthy and influential? Is it going back eastward? Who's buying all of the metal across the globe? They are. Where's it all go? That $10 premium on silver that never goes away. That's going over there. What are they doing with all the dollars they're choking on? Well, either they're buying commodities or they're expanding through the Belt Road Initiative and bringing in partners who are underdeveloped and resource rich in Africa and South America and Asia. And they do that by building the infrastructure, building the roads, the bridges, the maritime channels, building the oil refineries and oil wells, building the gold and silver mines and the refining capability, and then allowing those countries to become industrialized for a piece of the commodity pie. How about the BRICS? Everyone that's joining, what are they? Resource rich, and have great shipping lanes on land or by sea to stay away from the United States Navy. So the bottom line is that this is moving to a period of time where paper promises and treasuries by a broken, insolvent country that is sanctioned and weaponized the dollar and the treasury market are now coming headlong into the value proposition of that, or real commodities, real things, real alliances that push back against it. And by the grace of God, if I'm right, someone got to Trump and said, this is happening and we too need to join this or we're dead. So I hope I've painted a coherent picture. Gold and silver are worth a whole hell of a lot more than the dollars that are used to purchase them. And I think that there's a lot more in store, bigger, for gold and silver than any of us think possible. But I will rest my case, Your Honor, and happy to answer any questions if you have any.
I appreciate you taking the time to connect the dots, because it's very clear, even just in the last decade, just how gold and silver continue to speak. But more importantly, and you mentioned it, after 50 years of silver being so suppressed, that the metals are speaking the truth. And I love the way that you've been able to continue to educate all the other pieces of facts, hard truths that a lot of people maybe are not aware about. Knowing all this information that you spoke about, 98% of that being factual and truthful. We don't hear about that on mainstream media. Lots of times, we keep hearing, oh, gold and silver are in a bubble. And the reason why I'm bringing this up is, to me, this is beyond even a paradigm shift for the financial world. I also think if you're going through hard times and these challenges, and the everyday person just trying to survive rather than learning how to thrive, and be financially educated, I think it's going to affect in other areas of well-being. And the reason why I'm going here with you is I have a lot of family and friends and even people that watch the show that are really concerned about their financial well-being, but also their overall well-being. And something I want to ask you is, there's two things, right? You could play victim and say, poor me, or why is this happening to us? Or there's nothing that we can do in our control. Or you could also educate yourself. And as we know, education can be taxed, can be stolen, powerful. And that's something that I've always admired about you. But what I'm getting at here is how can we shift that energy of knowing the hard truths into positive light in terms of making good decisions for people to take care of themselves who are watching right now? And then the second part is why have you decided all these years to continue to educate others? You can easily just take care of yourself and not worried about humanity in the world. So those are my two questions for you right now. What do you
I'm kind of afraid to tell you what I really believe about the second question, but I will. I'll be honest. The first question is when people need to understand that I come from nothing. My dad's middle name is Miles, and his best friend's middle name is Franklin.
do?
He's no longer part of this company at all. We bought him out 3 years after we started. But he lent us $60,000 in 1989 to start a company before the internet in a box-sized room the size of a closet, on a wing and a prayer. We're the least likely cast of characters to got to where we are. We've just eclipsed 15 billion in sales without a customer complaint.
Mm.
And my dad told me when I started the company with him, I was 19, that you'll buy something. I don't care if it's a silver dime. You'll buy something every 2 weeks and you get paid or I'll fire you. He won't fire me anymore, Ben, but I've honored my promise to him, and it was the greatest. I've owned the company outright for 2 decades. It's the greatest gift I've ever been given in my life, ever. And that gift is to understand the laws of compounding, whether it be of time or energy or effort, not just interest. And I have honored my promise to him, and I have never missed a 2-week period, ever, in 36 years. And I'm not going to be a victim, and I would rather take things, instead of relying upon someone else to secure my future, take it upon myself to do it. Now, the greatest gift you can give a young person is to make them pay themselves first, and do not touch it for as long as you humanly possibly can, because life is like a roll of toilet paper. When it's big, brand new, you don't notice it spinning when you're young. It's not moving. You get older, it starts to move faster, and you start to see the cardboard, and you wake up one day, and I'm 55 years old. I still feel like I'm 19 in my mind. But life, just like that, it is. It's crazy. Everyone always says that, you're like, bullshit, I'm young. Time isn't, but it is. You look back on it, like, where did that time go? And so just like anything, if I wanted to be a college baseball player before I hurt myself. I wasn't the best player on my high school team, but I went to the University of Minnesota and would have been on the team had I not blown out my knee freshman year. I outworked people. I outworked people in athletics my whole life, semi-pro softball. I outworked people in business, least likely person to have been here, never even graduated college, self-taught, hard work, every day, build something that I'm proud of, which kind of dovetails into the second question. I've always had a hard time when people who have never built anything themselves have a hard time understanding that you can do the right thing and run a good business. People say to me, oh, if gold and silver is so expensive, so great, why are you selling it? I almost want to throw up how stupid of a question that is. It's like, so a guy that loves, he has the greatest spaghetti recipe of all time. He's the greatest spaghetti maker of all time. Would people question, if spaghetti's so great, why'd you open a restaurant? It's like, I've been buying gold and silver every 2 weeks for 36 years. It has changed my life more than anything. Anything. It has taught me how to save. I make all my employees do it. Every one of them thank me every time I see them. Every time, my God, thank you. I cannot believe how I've been putting that away every 2 weeks. I can't believe what it's done for my life.
You also taught me that too, by the way.
Did I? Right on. Well, and look,
3 years ago.
and look at the compounding of time, right? I mean, you look at what you've accumulated for 3 years, like, holy crap. And then that warms my heart. But to me, it's wealth. If I wrote a book, I would write a book, How to Get to the Top Without Being a Prick. And you do so by doing the right thing. Now, I have a son who's in the business. My dad and I started. I I want to leave a business that I'm proud of. I look at this point, Ben, to your point, when I just did an interview with Catherine Austin Fitz, it got 420,000 views already. Do I want to say stuff really stupid and disingenuous that would ruin my family's name forever? Now, when I was a kid, there was no internet. You didn't screw yourself forever. You could do something and you're branded an idiot across the globe forever. It doesn't leave. My intentions have never been as pure as they are. YouTube changed my life. I didn't expect it to do this 5 years ago when I started doing videos. Now, the part about being afraid, I don't know why I do it. Now, if I tell you I'm not trying to be holier than thou, I am not a very religious person. I'm incredibly spiritual. I believe in a higher power. I believe in doing the right thing. If I had a religion, it would be karma. To me, that is a real religion rather than something that we read about that, to me, religion is what you make of it, and it's doing the right thing. And if I told you the truth, you might think I'm nuts because I'm not, but I almost feel like this is what I'm supposed to do. I get letters from around the world that make the hair on my arm stand up. That, like, I look myself in the mirror at night after reading one of these letters, and I say, God, I don't even know what to say. Thank you for putting me in a place like this, God, to be able to contribute to the world, to make it a better place best I can. I get people from around the world saying, you've changed my life. You're a prophet. You're Noah. All of these things that I don't claim to be. They say, how did you know? You changed my life so materially. Thank you. Thank God. I hope God looks out for all of this stuff. It makes it worth it. Makes me feel like, am I supposed to be doing this? It's scary. I meet a new guy at the country club I live in the other day. He new member at my club. I live at a country club in Boca, and we're watching one of the hockey games for the Olympics just the other day, and we're sitting at a bar outside by the swimming pool at the club, and we're talking about the condition of the golf course and unhappy with some of the greens. And the next to us says, mind if I jump in and listen? I'm a new member. I'm such and such. I said, oh, hi, Andy Schectman. He says, oh, I listened to you on Quoth the Raven. I'm a Philly guy. I go to a concert at the Hard Rock Cafe, and I walk in with some of my friends and a couple guys from one of the blackjack tables. Place is bumper to bumper, crowded as hell in there. Screams my name, Go Silver. I'm at the Wynn in Vegas at a conference, and a 6'5" guy who holds the door when you get into the cab says, you're Andy Schectman. I watch all your stuff. It's crazy. I was on a chairlift in Vail with my son, my son, and some guy, and we rent skis when we go out there. We bring our own boots because you get brand new skis and they bring it right to your hotel rather than bringing skis with you. And they put a sticker with your last name on it. Guy says to my son, oh, Schectman, you related to Andy Schectman? I'm like, yeah, that's me. It's like, it's changed my life. It's scary. I'm way out there, but I am very cognizant of what I am saying. I try to be respectful when I speak about the government. I am a patriot. I think that we've deviated from what our culture is, and all of these things during the previous administration. We're going back to it now. I have a lot of things that bother me, but I try and be respectful about it. I try and tell people truth and facts. And yes, it does build my business. But when I do these shows, you will never hear me telling people to call Miles Franklin to buy gold. Never. It's about education. If you do the right job, I've had people in my staff say, yeah, this guy called me, said he just bought $2 million in gold from a competitor and wanted to apologize because he didn't know that we sold gold. Okay, sorry. For every few you miss, the idea is to do the right thing and business will fall. Why do I do it? I do it because I almost feel like I'm supposed to do it. I can't explain that. I can't. And I'm not a woo-woo guy. Just feel like it is something that I'm supposed to do. And I wake up every morning excited to research. And if you knew me in high school, you'd say, who the fuck are you that you want to wake up in the morning and research? You're the guy that didn't even want to go to class. I can't explain it, Ben. And I'm not trying to sound more important or self-righteous. I'm just simply saying there are moments in people's life where maybe that are bigger than us, and you question how and why. Why do I look at the world this way? Why do I say these things? And I try and find meaning in it other than to say, universally, I get a pretty good response. I don't get many people that, because if I don't know it, I say I don't know it. If it's my opinion, I say it's my opinion. Where I, even in our discussion, I say, well, here's the point where I'm trying to connect the dots. I don't claim I know. I say, this is fact, this is fact, this is fact, and over here, that's fact, and that's fact. So putting them together, what does it mean? That's what I'm trying to do. And in the end, I guess we're all searching for significance in life. And if you can look yourself in the mirror, Ben, and say, man, I did my best to contribute to the world, well, that's a great thing. And you are doing it right now. And why are you doing it? Why are you sitting in front of a camera talking to a knucklehead like me for an hour and a half? Why? Who are you trying to help? Are you trying to better yourself? You just want to make money. You don't have any real interest in helping people. You're just trying to, hoodwink people so you can make money. I mean, there are a lot of people who will think that. And those are people who have never built anything, who have never worked really hard to do something on their own. No one gave you anything. I started interviewing with you way back when you had nothing. I mean, in terms of experience in this, whatever your motivation was, why are you still doing it? Yeah, the idea of business is a concept called mutual benefit. It benefits the company, but more importantly, it benefits the customer or the potential customer. And when you find an ability to benefit everyone, like in a debate, the idea of winning a debate is both sides feel like they won. Great. That's what this is all about. So why do I do it? Because it builds my business, which, by the way, in 36 years and 15 billion in sales has never had a material customer complaint. So a good business by someone who's trying to do the right thing, to leave a legacy for my kids who will take over the business. My son will, and hopefully my daughters come into, and doing it in a way that I don't hide, right? You look at some of these Asian guys, the Asian AI guys, and the only one that I watch and I think is good is OG John Agee. But we don't know who he is. I wish I did. I'd like to have a beer with him. That's a facade, right? This is a team of people who are using an AI interface to disseminate information. I respect that. I'm an idiot who puts his real name out there. Like I have guys that work for me as outside affiliates that they're not their real names that they mention. Why? Because they want to have that privacy that they don't want to be way out there. I am. And I think about it every day. And if you're going to be like me, who's either stupid or brave enough to say what he believes and show his real face and say his real name, because I started doing this before I had any intention of it going this far. That was a one-off, but I kept getting asked, come back, sure. And all of a sudden, a one-off became 40 a week interviews or 30 a week, whatever. I'm like crazy. I built a channel. When you and I first interviewed, I hadn't even started my YouTube channel, and I did now. And now we have 120,000 followers or whatever. It's like, I didn't see all of this. I just started out with good intentions, and then I asked myself that question along the way. Why? I don't know. It feels right. And when I look at comments, I mean, I don't know that I've ever done an interview like this where I just went, which was kind of cathartic, but I try my best to do the right thing. And if I help people along the way, then we all meet our maker someday. And what did you do to make the world better? Well, I tried. I tried to build a good business for my family to be proud of, to put food on our table, and to put food on other people's tables who have hopefully found significance in the things that I've said. And fortunately, much of what I've said has been right. And that's the other thing. You don't know when you're saying these things, will you be right tomorrow? You hope so. You try to be. You say it the right way. You hope so. I'm not an advisor here to anyone. I'm just a guy that hustles and works hard and only speaks fact. And when he doesn't know fact or when it's not fact, will tell you so. This is my opinion. This is where I think it's going. This is where I think the dots lead us to. That's up for you all to figure out yourself too. And there is a certain level of responsibility that should come with anything in life, and even going to a doctor and getting their opinion. Would it be responsible to get a second and third opinion? Sure it would. Do you? Don't know. Everyone has to accept some responsibility, and I do my best to point you in the right direction. Sorry for going so crazy on that question.
I appreciate you opening up. And when I first met you, one of the values that really stood out to me was integrity. You also mentioned that you're very patriotic, and for sure, like you're super passionate about your country, but I think you're passionate about a lot of things, about people, about education, et cetera, et cetera. And, one of my friends actually asked me today, "Hey, who are you interviewing today?" And I said, "Andy Schectman." And I said, what I like about Andy, the thing that stands out to me is he's a good human. And a good human doesn't have to do anything with finances or anything like that. It has to do with values. And
That's exactly right.
I think, I think whenever you see someone's values, it just stands out. And it's
Well,
clear.
yeah, because values are the most important thing. It's like this is someone who won't do harm first and foremost. It's like what's it called? The Hippocratic Oath. Do no harm first and foremost. If you're a doctor, well, it's kind of the same thing. I think if you go by that
Mm.
premise, then yeah, he's looking out for his interests and mine, and neither more than the other. In fact, if you are self-serving and short-sighted as a businessman, you have a short career. I mean, I come from nothing, and I know for a fact that doing the right thing and working hard for other people rewards you. This is the whole concept of capitalism that so many people have a hard time understanding. And that's why when the whole thing in the previous administration where meritocracy was thrown out the window for lifestyle, see, my parents were hippies. I grew up in the 70s, right out of that 70s show. I mean, my house smelled like weed. My older sister was a Vikings cheerleader, Minnesota Vikings. I saw things in my house. My parents were of that crazy age in the early 70s where people were discovering themselves, and I was a jock. Grew up amongst all of this, understood it, appreciated it, but went a different direction and had a million friends who went that direction. I understand lifestyle very well, and okay, I'm very socially liberal, just fiscally conservative because I work my ass off from nothing to get to somewhere. In everything I've ever done, it has been about effort. I'm not the smartest, I was not the best athlete, I was not the best businessman, but I outworked until I got there. That's kind of my whole thing, and doing it the right way along the way. And that's why the previous administration killed me, because when you're allowing people to be placed in positions just because of their lifestyle, you are so far off of what this country once was all about. And that's why I respect Trump. I wish more people would take a step back from the hatred and the venom. And the way he does things are somewhat buffoonish sometimes, but he has done more for this country, in my opinion, in terms of his policies and restoring our culture, which is very important to me. And, I think if we never take a moment to communicate and listen to another viewpoint, we learn more and more about less and less till we know everything about nothing. And we never grow. And we've stopped growing as a country because of the divisiveness and that, it used to be we're all Americans. Now we're black, white, rich, poor, vaccine, no vaccine, red, blue. You're defined by who you voted for in the last election. I go to Thanksgiving dinner and my wife says, if you say a fucking word before dessert, I'll kill you. Not a word about this stuff. Okay, I promise. Because even with family, it becomes ugly. So I get it. I just try and, do what I can to contribute. And that's where I'm at. And I thank God every day that it's played out the way that it has. But when I started doing YouTubes 5 years ago, I had zero idea this is where I would end up.
I love that, Andy. I want to give you the opportunity right now just to share with the world, who is Andy Schectman beyond his titles? Who are you?
But I mean, people see who I am. That is who I am. I'm a guy that came from nothing that, thanks God every day that I was born in the United States and have had the opportunities that were presented to me, whereby I had the ability to create my own destiny. I'm just an average, normal guy. Grew up in Minnesota under Midwest values. Hates what's happened to the state of Minnesota. Moved to Florida, where we've had an office for almost 2 decades that my oldest friend in the world opened up. I have friends that go back to childhood. Almost everyone who works for me, I go back to childhood with. They all came to work for me after the pandemic. They all had great jobs in and of themselves till then, and Wall Street, private equity, owning businesses, Wharton grads, etc. And friendship goes way back for me to Little League time, where I think that says something about people. A lot of people I meet along the way don't have any friends from when they were kids.
Mm.
Almost all mine are. And I'm just an average guy who tries to do the right thing. People could say, well, why do you work with all your friends? And why do you even have all these brokers? You could be an online company and make a whole lot more. You're right. I could do
Mm.
the right thing. To me, helping and giving opportunities to people you love and care about is far more rewarding than the monetary reward. Believe that or not. For what it is. Everything I do is just coming from a place of trying to do the right thing and let the chips fall where they may. That is who I am. I'm an average guy, normal guy. I don't look at myself as being anything other than that. And just anyone who does anything for as long as I have for 36 years should be good at what they're doing. And so when it comes to this industry, I think I know as much or more than anybody. When it comes to economics, it's again what I know best. Outwork. Spend 3 hours a day, 7 days a week studying and preparing. So when you come back to do your podcast, you don't look like an idiot. And along the way, you find, wow, I actually like this and I see where things are going and I feel empowered, educated. I don't know. That's who I am, man. I am who I appear to be on here. Or you watch my Monday night tonight, I do a live stream with a guy named Kevin who works for me every Monday night. That's, really who I am. I get a little bit more goofy, but just a normal guy, man. Have a beer with me one day when we're together. You'll see I am 100% same guy I am here. I'll be there, except smile a little bit more.
I would echo those words. I've met you a couple times, Andy, and I also look forward to the day you come visit Montreal. I know you love Montreal. I can't
I
wait to show
do.
you around. I have one final question that I really want to ask you is, I know you care a lot about others, your family, your wife, your kids, your close friends, and just the whole world. If this was the last interview where people were watching you and listening, what would be one thing that you'd want to share?
Oh boy, that's a curveball. What would it be? I guess I can make it real trite and real easy and say I could sum it all up by saying trust your gut. I have a tattoo right here of the periodic table of elements: gold, silver, platinum, palladium. Side note, I was getting a tattoo in Amsterdam with my wife and another couple at
Mm.
midnight. That's what you do, I guess, after you get a little banged up in Amsterdam. Never had one before. And my daughters were like, that's so wicked. And then I sent them a picture like, you're a nerd. But if I were to get another tattoo, it would either be Little by Little, which is the name of my podcast,
Mm.
or Trust Your Gut. Because I think that most of my success has come in life through trusting my gut, my first intuition. Most of us are blessed with good intuition. We don't listen to it. We follow the masses and we follow the herd because we're afraid to be an individual, which I never have been. We're afraid to stand out and to do things that the crowd isn't doing, like this right here. I'm not
Mhm.
afraid. I trust my gut. Most of us go through life saying, damn it, I should have done that. I knew it. It would be trust your gut. We live in uncharted waters. Right now, no one can give you advice there's no perspective as to anything that remotely close to where we are today. Trust your gut and your intuition. It is a survival mechanism that is built into us and more people should trust. And if you listen to your inner voice more often than not, you'll have fewer regrets. If you do things because you believe so rather than because someone told you to do so, it's easier to be right and it's also easier to be wrong. It's more rewarding to be right and easier to be wrong. So I don't mean to avoid that question because I think I've kind of spilled my guts as to what I believe and who I am, but if I would give any advice, it would be to pay yourself first, always, regimented, every 2 weeks, every time you get paid. I don't care what it is or how you save it. Better to save it in assets rather than currency, because currency devalues assets. This is how the wealthy get rich. Assets feed you, liabilities eat you. The dollar is a liability. Pay yourself first, trust your gut, listen to your inner voice, and don't be reliant upon money managers who have less than pure interests. Last thing I'll say about that, when I started in this industry in 89, 90, they were called stockbrokers. They made a percentage of every trade you made. And then came the internet. I started before the internet, which blows my mind. Then comes the internet, and Scott Trade said, I'll do that for $9 instead of 1%. Stockbrokers became, they went the way of the dodo bird. They became obsolete. And now they make money by keeping you under management. They make a percentage of what is under management. So they may not give you the impartial answer that you want, because they don't want you to leave and buy precious metals. They don't want you to take your money out and do something that leaves the ecosystem, because it takes away from them. So I would just simply say, trust your gut, even in terms of management. If more people spent as much effort and time managing their money and investing it as they did working to get it every day, they'd be a whole lot better off. There's an old saying, OPM, other people's money, is a lot easier to manage than it is your own. And so they don't have the same emotional attachment. Trust your gut, pay yourself first, and educate yourself. That's what I would tell people to do. That doesn't tell you who I am or what I'm all about. I already told you that. Just the average simple guy who tries his best to do the right thing. So I hope that helps a little bit, but there's so much of me out there that, I've done about 6,000 videos. There's probably 50,000 out there, because people will copy like parts of this video, put different images and music behind it, and they'll do it to monetize their channels. Because, you get paid by Google, the more clicks you get.
Google Ads, yeah.
I don't know who they are, but it's usually pretty flattering. But there's enough of me out there where people can get a pretty good idea of who I am. I know that's really not what the answer you're looking for, but just a normal guy who tries to outwork people and do the right thing, and one who trusts his gut always, and is responsible for his decisions. That's who I am, and that's who more people should be, rather than relying on someone to tell you what to do, and when they're wrong, that son of a bitch, why did I listen to him? Why didn't I trust my gut? Oh, that's right, I should have. So that's who I am. That's my advice.
I appreciate those pieces of advice, because I also think there is a slogan that I really believe in, but I always feel our heart always knows the truth to anything. Yeah. We could always
That's the same thing as trusting your gut. Your heart knows, your gut knows, yeah.
That I feel, whether it's the finance world or in a relationship, just in general, the heart always knows like the truth.
When you need to convince yourself of the truth, the heart says, you're an idiot. Sorry. So does the gut. And I got a bad feeling about this, but okay, let's do it. Never works out, right?
No.
That's the point. And it's even as something, you grew up in Montreal, I grew up in Minnesota, even driving on an icy road, your first reaction is the right one. Pump your brake, it's not the one after. It's the first reaction, your first gut instinct is typically the right one. So be that as it may, my man, I enjoyed our conversation. I will reach out to you when I come up to Montreal, and let's do this again real soon.
Thanks, Andy. I really appreciate you being here. And I just want to end off by saying you've had a huge impact, not just on my financial education, but also just, again, your groundedness to speak the truth. It's not always easy to speak the truth or, to be out there. And just listening to you over the years has made me always more confident to speak my truth. So I just want to take this last little bit of time just to say, really appreciate you for always providing the mentorship to me, and really, really enjoy seeing you soon in Montreal, or vice versa. I'll have to come visit you.
Yeah, well, Florida's a lot nicer in the winter than Montreal. So if you make it down this way, let me know.
Great. And I know I'll also see you at Rick Rule's conference in July. I'll see you then. And let's just wrap up again. Thank you for being here.
Thank you, brother. Look forward to it. You stay well.
Cheers.